In the ever-evolving landscape of global finance, few companies have managed to secure a position as influential as Visa. Once a seemingly modest payments processor, Visa has risen to become the world's most valuable financial services company. This achievement, marked by its impressive ability to process $14.8 trillion in total transaction volume over the previous 12 months, as of 2023, underscores its unrivaled dominance in the credit card market. Visa's journey to the top is not just a tale of strategic acumen, but also one of relentless innovation and adaptability. Its rise signals a paradigm shift in the financial sector, where traditional banking giants like JP Morgan, Citibank, and Chase Bank once held unchallenged sway. Today, these institutions find themselves overshadowed by a company that doesn't hold a trillion-dollar balance sheet, but has revolutionized the way money moves around the world. The company's current status as a financial titan is a testament to its strategic vision and execution. Visa has not only managed to fend off competition from long-standing financial institutions, but has also outpaced emerging fintech rivals. This success is underpinned by its robust infrastructure, extensive network, and a relentless focus on customer-centric innovations. Visa's story is a fascinating exploration of how a company can transform itself and the industry it operates in. By examining its historical roots, strategic pivots, and the key personalities behind its success, we can glean insights into the mechanisms that drive financial dominance in the modern era. I began to slide into depression, that dark, dismal swamp that robs my ability to think or function normally. In the end, Worthen Bank wins the lawsuit and D. Hock is forced to lift his ban. And now, his member banks are free to issue both Bank AmeriCard and MasterCharge cards. Despite the legal challenge, NBI is about to enter one of its highest growing stages ever. Although the 1970s are a troublesome decade for the United States, international travel and trade have risen sharply for the rest of the world, leading to explosive business opportunities for the use of credit cards. By capitalizing on the shift towards a cashless economy and consumer demand for convenience, Bank AmeriCard has become the global leading payment system. But D. Hock realizes that to further simplify its international business, there needs to be a strong and powerful brand. By the mid-1970s, his firm decides to change the name from Bank AmeriCard to Visa. The Bank AmeriCard is headed for extinction, at least in name. Starting sometime next year, according to National Bank AmeriCard Inc., the name of this credit card will be changed all over the world to Visa, a word expected to be universally acceptable. By the early 1980s, despite facing intense competitions, Visa has achieved significant market share of 60%. By introducing products like Visa Travelers checks and innovative security features like holograms on cards, its billings soared to $59 billion. D. Hock's thesis has been proven correct. He has built Visa into a thriving, decentralized organization, believing his mission is fulfilled, and to further prove that Visa is a unique entity that can do well without him at the helm, he decides it's time to retire. Little does Hock know that within a mere decade, Visa will grow to become a monster, an industry power that will defy everything he stood for. The credit card industry is on the rise. By the early 1990s, it handles trillions in transactions. Recognizing this lucrative opportunity, many industry titans are eager to capitalize on the trend. One of them is Phil Purcell. Purcell was very entrepreneurial from the very beginning. Even as a young man, he was already demonstrating his hustle, selling magazines and working at local dry cleaners on school days. While working at Sears, Purcell spearheads the launch of Discover. It's a credit card aimed at middle-class shoppers. By the early 1990s, Discover cards are worth $1 billion, positioning the card as a serious contender to Visa and MasterCard. Seeing the threat posed by Discover and other rising credit cards, Visa and MasterCard form an unlikely alliance. Together, they implement policies designed to prevent member banks from adopting competitor cards. Phil Purcell sees them as bullies, and their actions as grossly unfair. He decides to join American Express in reporting Visa and MasterCard to regulators. The lawsuit, filed by the Justice Department in Manhattan Federal Court, alleges they limited consumer choice and restrained competition by controlling both associations through the same banks and banning member banks from offering competitors cards like American Express and Discover. The lawsuit is a huge blow to Visa's business. If they lose, they could potentially lose billions. Visa's troubles are far from over. Even as the antitrust lawsuit loomed, another major company also set its sights on taking Visa down. In the early 2000s, a group of retailers led by Walmart files a class action lawsuit against Visa. They allege Visa is using its market dominance to enforce excessive debit card fees and restrict merchants from accepting competitor cards. The lawsuit claims this limits consumer choice and stifles competition. It's important to understand why Visa became such a monopoly. I think it's because of network effects, just like social network companies that came about later, such as Facebook. As more merchants and consumers adopt a payment network, it becomes more convenient and ubiquitous, drawing even more users. Mounting legal battles forced Visa to pay billions in settlements to companies like American Express, Discover, and the retailers involved in the class action suit. Soon, despite being a virtual money printer, Visa comes dangerously close to running out of cash to pay. As far as Visa's management is concerned, there is only one way out. Huge demand for Visa's record-setting IPO sent the shares surging Wednesday, even as the broader market choked on credit fears again. The success of the largest U.S. IPO in history and the strong interest from both professional and individual investors turned Visa into a bright spot in an otherwise choppy stock market. Visa's IPO in 2008 shatters U.S. records, raising over $17 billion despite the looming financial crisis. Investors love companies with a monopoly status. Visa's business model was so good, and investors were able to overlook the fact that it was constantly under litigation. From a decentralized payment network, Visa has become a dominating power in finance. In 2023, Visa has a revenue of $33 billion and a net income of $17 billion. Both increase steadily every year. With over $12.3 trillion in payment volumes going through Visa, it is undoubtedly the king of payments. Well, shares of Visa hit an all-time high in today's session. Visa stock has been steadily on the rise since the company's last earnings report, which forecasted a resilient outlook on consumer spending. None of this would have been possible if not for the ingenuity of one man. The rise of Visa marks a significant shift in the financial landscape, one that began taking shape in the mid-20th century. The post-World War II era was characterized by economic prosperity and the expansion of the middle class in the United States. This period saw the emergence of consumer credit as a powerful economic force, paving the way for the development of credit cards. In the 1950s, the concept of consumer credit was revolutionized by the introduction of various special-purpose cards. Gasoline cards, airline cards, and store cards like those from Sears allowed customers to buy goods and services on credit, fostering a culture of consumerism. This burgeoning landscape set the stage for the creation of a single general-purpose credit card that could consolidate these various forms of credit. Enter Bank of America, under the leadership of visionaries like S. Clark Bysee and Joseph Williams. These individuals were instrumental in the development of the Bank Americard, the precursor to Visa. The Fresno Drop of 1958, an unprecedented mass mailing campaign, marked the beginning of a new era in finance. By distributing unsolicited credit cards to households in Fresno, California, Bank of America introduced a revolutionary concept, a credit card that could be used for a wide range of purchases at multiple merchants. This bold move, despite initial challenges and significant financial losses, demonstrated the public's appetite for a flexible and convenient credit solution. It also highlighted the potential profitability of credit cards, setting the foundation for what would later become Visa's vast network. Visa's journey from its humble beginnings to its current status as a global powerhouse is a tale of strategic foresight and relentless pursuit of innovation. The story begins with Amedeo Giannini, a figure whose impact on the banking industry cannot be overstated. Born into an Italian immigrant family, Giannini started his career as a grocery merchant before founding the Bank of Italy in San Francisco in 1904. His mission was simple, yet revolutionary: to provide financial services to the working class and immigrants who were often ignored by traditional banks. Giannini's vision of inclusive banking laid the groundwork for what would eventually become Bank of America. His approach was based on generosity and a deep understanding of the needs of ordinary people. As California's economy boomed, so did Giannini's bank, which by the late 1920s had grown to boast over $1 billion in assets. Through a series of mergers, the Bank of Italy transformed into Bank of America, a financial behemoth with a diverse range of services aimed at the burgeoning middle class. The transition from Bank of America to the creation of Visa involved several key developments. The introduction of the BankAmericard and its subsequent evolution into Visa was driven by a series of strategic decisions, innovative technologies, and the ability to navigate and overcome challenges. Visa's dominance today is the result of a century-long journey of innovation, strategic vision, and an unwavering commitment to meeting the evolving needs of consumers. From its early days under Giannini to its current status as a global financial titan, Visa's story is a testament to the transformative power of visionary leadership and relentless adaptation. In the early 20th century, the financial landscape was dominated by traditional banking giants. On the East Coast of the United States, names like J.P. Morgan, Citibank, and Chase Bank were synonymous with immense financial power. These institutions wielded significant influence, not just due to their vast balance sheets, but also through their extensive networks of branches and their deep connections with both industry and government. They were the custodians of the nation's wealth, playing pivotal roles in financing industrial expansion and economic growth. But the East Coast's financial dominance was mirrored on the West Coast by an equally important figure, Amedeo Giannini. Giannini's Bank of Italy, which would later become Bank of America, was a beacon of progressive banking. Unlike the conservative lending practices of his East Coast counterparts, Giannini's approach was inclusive and innovative. He recognized the potential in the burgeoning immigrant population of California and sought to provide them with access to financial services. This vision set him apart and laid the foundation for a banking revolution. Giannini's strategy focused on the common people, a stark contrast to the elite clientele targeted by traditional banks. He believed in the power of the middle class and small businesses, providing them with loans and financial services that were previously inaccessible. This approach not only fostered economic growth but also cultivated a loyal customer base that would propel his bank to new heights. By the late 1920s, Bank of Italy had grown substantially, boasting over $1 billion in assets. This growth was fueled by Giannini's relentless drive to support the common man and his ability to capitalize on California's economic boom. His bank's success was a testament to the power of inclusive financial practices and served as a blueprint for future innovations in the banking sector. As the East and West Coast banks continued to expand, the stage was set for a new kind of financial service that would eventually redefine how transactions were conducted. The traditional banking giants had laid the groundwork, but the next phase of evolution required a leap of imagination and technology. This leap was embodied in the rise of consumer credit and the advent of credit cards, a development that would forever change the financial landscape. Section 2. The rise of consumer credit. The post-World War II era brought about significant changes in the financial habits of Americans. The United States experienced a period of unparalleled economic prosperity, characterized by the rise of the middle class and the rapid expansion of consumer credit. This era marked the beginning of a new economic paradigm, where the availability of credit played a crucial role in driving consumer spending and economic growth. Consumer credit began to take various forms, facilitated by the introduction of special purpose cards. Gasoline companies were among the first to issue such cards, allowing customers to purchase fuel on credit. These gasoline cards proved immensely popular and paved the way for other industries to adopt similar practices. Airlines, seeing the potential to foster customer loyalty, followed suit by introducing their own credit cards, enabling travelers to finance their trips with ease. Retail giants like Sears also recognized the power of consumer credit. They began issuing store cards that allowed customers to buy goods on credit. This move not only boosted sales but also helped build a stronger relationship with their customers. The convenience of these special-purpose cards was evident, but they also highlighted a growing need for a more unified and flexible credit solution. The rise of consumer credit was not without its challenges. Traditional banks were initially hesitant to embrace this new form of lending, fearing the risks associated with extending credit to a broader customer base. However, visionary leaders within the banking sector began to see the potential of consumer credit as a driver of economic growth. They realized that by offering credit to the middle class, they could tap into a vast and largely underserved market. This realization set the stage for the development of a general-purpose credit card. one that could be used across various merchants and industries. The concept of a single card that could replace multiple special-purpose cards was both revolutionary and ambitious. It required not only a robust infrastructure, but also a shift in the financial mindset of the time. As consumer credit continued to gain traction, the financial industry began to explore ways to streamline and expand credit offerings. The groundwork was being laid for the introduction of the first general-purpose credit card, a development that would soon change the way people conducted transactions and managed their finances. The advent of credit cards was just around the corner, promising a new level of convenience and financial accessibility. Section 3. The advent of credit cards. The concept of a general-purpose credit card was a game-changer in the financial world. It was the brainchild of forward-thinking bankers who saw the potential to revolutionize consumer credit. Among the pioneers of this new financial instrument was Bank of America, led by S. Clark Bysee and his innovative team. They envisioned a card that could be used for a wide range of purchases, eliminating the need for multiple special-purpose cards and simplifying the consumer credit experience. The development of the Bank Americard was a bold and ambitious undertaking. It required extensive planning, technological innovation, and a willingness to take significant financial risks. The Fresno Drop of 1958 was a testament to this audacity. Bank of America decided to distribute 60,000 unsolicited credit cards to residents of Fresno, California, in an unprecedented mass mailing campaign. This move was designed to gauge public interest and acceptance of a general-purpose credit card. The response to the Fresno Drop was overwhelming. While there were initial challenges, including high delinquency rates and cases of fraud, the public's appetite for a flexible and convenient credit solution was evident. Customers appreciated the ability to make purchases without the immediate need for cash, and merchants saw the potential for increased sales. The early days of the Bank Americard were fraught with difficulties. Fraud prevention was a significant challenge, as criminals quickly found ways to exploit the new system. However, these initial setbacks did not deter Bank of America. Instead, they spurred the bank to refine and improve the credit card system. Measures were put in place to combat fraud, and the infrastructure for processing credit card transactions was continuously enhanced. The success of the Bank Americard demonstrated the viability of a general-purpose credit card. It also highlighted the potential profitability of such a financial product. As the card gained popularity, more banks expressed interest in issuing their own credit cards. This interest led to the development of a licensing model, allowing other banks to use Bank of America's infrastructure to issue their own cards. The advent of credit cards marked a significant milestone in the evolution of consumer finance. It introduced a new level of convenience and accessibility, changing the way people managed their finances and conducted transactions. The success of the Bank Americard paved the way for further innovations in the credit card industry, setting the stage for the rise of Visa as a global financial powerhouse. Section 4. The birth of Bank Americard. The creation of the Bank Americard was a pivotal moment in the history of consumer finance. It represented the culmination of years of innovation and strategic vision. Joseph Williams, a key figure in Bank of America's management, played an instrumental role in this development. Williams recognized the potential of a single general-purpose credit card and was determined to bring this vision to life. The initial launch of the Bank Americard was marked by the Fresno Drop, an audacious marketing campaign that put credit cards directly into the hands of consumers. While the campaign faced significant challenges, including high delinquency rates and widespread fraud, it also provided valuable insights. It demonstrated the public's interest in a flexible credit solution and highlighted areas that needed improvement. The early success of the Bank Americard can be attributed to several factors. First, it addressed a clear need in the market, a convenient way for consumers to make purchases without carrying cash. Second, it provided merchants with a new tool to boost sales and foster customer loyalty. Finally, it introduced a new revenue stream for banks as credit card loans proved to be highly profitable. One of the critical innovations that contributed to the Bank Americard's success was the introduction of the one-month grace period. This feature allowed customers to pay off their balances without incurring interest charges, provided they did so within a month. This grace period made the card more attractive to consumers and helped differentiate it from other forms of credit. As the Bank Americard gained traction, Bank of America began to explore ways to expand its reach. The licensing model, introduced in the early 1960s, allowed other banks to issue credit cards using the BankAmericard's infrastructure. This model proved to be a game changer, enabling rapid expansion and increasing the card's acceptance among consumers and merchants. The birth of the BankAmericard was not without its challenges, but it laid the foundation for the modern credit card industry. It introduced concepts and systems that would become standard in the industry, paving the way for future innovations. The success of the BankAmericard set the stage for the rise of Visa, transforming a humble payments processor into a global financial titan. This journey from the BankAmericard to Visa is a testament to the power of innovation, strategic vision, and the relentless pursuit of excellence in the financial sector. The transformation of Visa from its origins as the BankAmericard to a global financial powerhouse is a story of strategic evolution. Following the initial success of the BankAmericard, Bank of America recognized the need to establish a more inclusive and expansive credit card network. This realization led to the formation of National Bank Americard Inc. (NBI) in 1970, under the visionary leadership of D. Hock. Hock's innovative approach redefined the organizational structure of the network. He proposed a decentralized, self-regulating system that allowed member banks to issue credit cards and manage transactions independently, but within a unified framework. This structure ensured that the benefits of the network were widely distributed, fostering cooperation among competing banks and promoting widespread adoption. At the heart of this strategy was the concept of interchange fees, small fees paid by the merchant's bank to the cardholder's bank for each transaction. This mechanism incentivized banks to join the network and issue more credit cards, thereby driving the expansion of the system. The introduction of the BankAmericard licensing model in the early 1960s had already proven the viability of this approach, and under Hock's leadership it was further refined and scaled. The rebranding of BankAmericard to Visa in 1976 marked a significant milestone in the company's evolution. The new name, derived from the Latin word for way or road, symbolized the company's mission to facilitate the movement of money across borders and into new markets. This global vision was supported by a robust infrastructure that could handle increasing transaction volumes and ensure reliable service for customers and merchants alike. Visa's strategic evolution was not just about expanding its network, but also about continually improving its services. The company invested heavily in technology and innovation, ensuring that its payment processing systems were among the most advanced and reliable in the industry. This commitment to excellence helped Visa build a reputation for trust and reliability, which was crucial for its long-term success. Technology has always been a cornerstone of Visa's success. From the early days of the BankAmericard, the company understood that technological innovation was essential for scaling its operations and ensuring the efficiency and security of transactions. The introduction of the Base1 system in the late 1960s was a game-changer, providing a centralized electronic authorization system that significantly improved transaction processing times and accuracy. Base1, later known as VisaNet, was one of the first systems to allow real-time transaction authorization, clearing, and settlement. This technological leap enabled Visa to handle a growing volume of transactions with remarkable speed and reliability. As the network expanded, Visa continued to invest in its technological infrastructure, ensuring that it could meet the demands of an increasingly digital economy. In the 1980s and 1990s, Visa embraced the rise of personal computing and the internet. The company developed new systems for online transactions, laying the groundwork for the e-commerce boom. Visa's Secure Electronic Transaction (SET) protocol, introduced in the mid-1990s, was one of the first standards for secure online payments, addressing concerns about fraud and data security. The advent of chip technology in the 2000s marked another significant advancement. Visa played a pivotal role in the development and adoption of EMV, EuroPay, MasterCard, and Visa standards, which enhanced the security of credit card transactions by incorporating microchips into cards. This technology reduced fraud and gave consumers greater confidence in the safety of their transactions. As mobile technology emerged, Visa was quick to adapt. The company introduced mobile payment solutions, allowing customers to make purchases using their smartphones. Visa's commitment to leveraging new technologies ensured that it stayed ahead of the competition, and continued to provide innovative solutions that met the evolving needs of consumers and merchants. Visa's technological prowess has been instrumental in its growth. By continually investing in and adopting cutting-edge technologies, Visa has maintained its position as a leader in the financial services industry. This focus on innovation has enabled the company to offer secure, reliable, and convenient payment solutions to millions of customers worldwide. Visa's journey to becoming a global financial titan was not without its challenges. The early days of the Bank Americard were marked by significant hurdles, including high delinquency rates, fraud, and operational inefficiencies. These challenges tested the resilience and adaptability of the company, but ultimately contributed to its growth and success. One of the key challenges Visa faced was building trust among consumers and merchants. In the 1960s and 1970s, many people were skeptical about the idea of using credit cards. There were concerns about security, fraud, and the reliability of the payment system. To address these concerns, Visa implemented robust fraud prevention measures, including the development of advanced algorithms and systems for detecting and preventing fraudulent transactions. Visa also focused on educating consumers and merchants about the benefits and safety of using credit cards. Marketing campaigns highlighted the convenience and security of Visa cards, helping to build confidence and trust in the brand. These efforts paid off, as more people began to embrace the idea of cashless transactions and the convenience of credit cards. Another significant challenge was navigating the complex regulatory environment. As Visa expanded globally, it had to comply with a myriad of financial regulations in different countries. This required a deep understanding of local markets and the ability to adapt its operations to meet regulatory requirements. Visa's success in this area is a testament to its strategic foresight and operational excellence. Visa's commitment to building trust extended beyond consumers and merchants to its member banks. The decentralized structure of the Visa network required a high level of cooperation and coordination among member banks. Visa established clear rules and standards for transactions, ensuring that all members adhered to the same high standards of service and security. This cooperative approach helped to foster a sense of trust and partnership among member banks, further strengthening the Visa network. Overcoming these challenges was crucial for Visa's growth and success. By addressing concerns about security and reliability, educating consumers and merchants, and navigating regulatory complexities, Visa was able to build a strong foundation of trust. This trust has been a key driver of Visa's continued expansion and dominance in the global financial services industry. Visa's journey from a national credit card to a global financial powerhouse is a story of strategic expansion and market dominance. After establishing a strong foothold in the United States, Visa set its sights on international markets. The company recognized that the real growth potential lay in expanding its network beyond national borders and tapping into emerging markets. The rebranding of Bank Americard to Visa in 1976 was a strategic move that reflected this global ambition. The new name was easier to pronounce and more universally recognized, facilitating Visa's entry into foreign markets. Visa's global expansion strategy involved partnering with local banks and financial institutions, leveraging their knowledge of the local market to drive adoption and growth. One of the key factors behind Visa's successful global expansion was its ability to adapt to the unique needs and preferences of different markets. In Europe, for example, Visa worked closely with local banks to develop payment solutions that catered to the region's specific regulatory and consumer environment. In Asia and Latin America, Visa focused on addressing the needs of the unbanked population, providing them with access to financial services through innovative payment solutions. Visa's global expansion was also supported by its robust technological infrastructure. The company invested heavily in building a reliable and secure global payment network that could handle transactions across different currencies and regions. This network, known as VisaNet, ensured that transactions were processed quickly and securely, regardless of where they occurred. The rise of e-commerce and digital payments in the 21st century provided further opportunities for Visa's growth. The company developed new products and services tailored to online and mobile transactions, ensuring that it remained at the forefront of the digital payments revolution. Visa's ability to innovate and adapt to changing market conditions has been a key factor in its sustained dominance. Today, Visa operates in over 200 countries and territories, processing billions of transactions each year. Its global presence and extensive network of member banks have made it the most widely accepted payment method in the world. Visa's market dominance is a testament to its strategic vision, operational excellence, and relentless focus on innovation and customer satisfaction. Visa's journey from a humble payments processor to a global financial titan is a remarkable story of strategic evolution, technological innovation, and the ability to overcome challenges. By continually adapting to the changing needs of consumers and markets, Visa has secured its position as a leader in the global financial services industry. This story serves as an inspiration for companies looking to achieve sustainable growth and success in an ever-evolving landscape. Amedeo Giannini's story is one of extraordinary vision and unwavering determination. Born into an Italian immigrant family in San Jose, California in 1870, Giannini's early years were shaped by the struggles and resilience typical of immigrant life. His father's tragic death left his family in a precarious financial situation, compelling young Giannini to take on the responsibilities of a man far beyond his years. He began his career as a grocery merchant, a job that offered him a first-hand understanding of the economic challenges faced by ordinary people. Giannini's entrepreneurial spirit soon led him to the world of banking. In 1904, seizing an opportunity to serve the financial needs of the working class and immigrant communities, he founded the Bank of Italy in a converted saloon in San Francisco. His approach was revolutionary. Unlike traditional banks that catered primarily to the wealthy, Giannini's bank was inclusive, offering loans and financial services to people who had previously been marginalized by the financial system. This approach not only filled a crucial gap in the market, but also fostered a deep sense of loyalty among his customers. The 1906 San Francisco earthquake and subsequent fires provided Giannini with a unique opportunity to demonstrate his commitment to the community. While other banks closed their doors, Giannini set up a makeshift bank on the waterfront and continued to provide loans and services to help the city rebuild. This act of solidarity and resilience significantly bolstered his reputation and the trust of his customers. Giannini's vision extended beyond just serving the working class. He envisioned a bank that could offer a wide range of financial services to the masses, including savings and checking accounts, mortgage lending, and investment services. This vision materialized as the Bank of Italy grew and evolved, eventually becoming the Bank of America in 1928. Under Giannini's leadership, the bank expanded rapidly, capitalizing on California's economic boom and the increasing financial needs of its diverse population. Amedeo Giannini's innovative approach to banking laid the foundation for modern financial services. His commitment to inclusivity, community support, and comprehensive financial solutions transformed the banking industry and set the stage for future innovations, including the development of the Bank AmeriCard and the rise of Visa. His legacy is a testament to the power of visionary leadership and the impact of serving the broader community. S. Clark Basie's tenure as president of Bank of America marked a pivotal period in the bank's history. Elected in 1954, Basie was known for his pragmatism and forward-thinking approach. He succeeded Amedeo Giannini during a time of post-war economic prosperity when consumerism was on the rise. Basie recognized the potential to further expand the bank's services and set his sights on an innovative financial product that would revolutionize consumer credit, the credit card. In the mid-1950s, special-purpose cards like gasoline and store cards had already gained popularity, but they were limited in scope. Basie and his team, including visionary manager Joseph Williams, saw an opportunity to create a more versatile financial instrument. Williams proposed a bold idea, a general-purpose credit card that could be used for a variety of purchases across multiple merchants. This card would not only provide convenience for consumers but also open new revenue streams for the bank through interest and fee income. The Fresno Drop of 1958 was a daring experiment to introduce this new product. Bank of America mailed 60,000 unsolicited credit cards to residents of Fresno, California. Each card had a $300 credit limit and a 1-month grace period before interest charges kicked in. The response was immediate and overwhelming, albeit fraught with challenges. High delinquency rates and fraud initially plagued the project, but these issues did not overshadow the evident demand for such a product. Despite the early setbacks, the BankAmericard concept proved viable. The public's enthusiastic reception underscored a significant market need for a flexible credit solution. Bank of America embarked on refining the system, improving fraud prevention measures, and enhancing the transaction processing infrastructure. These efforts paid off, and the BankAmericard began to gain traction, leading to increased consumer adoption and merchant acceptance. The success of the BankAmericard was not solely due to the product itself, but also the strategic vision and leadership of S. Clark Basie. He understood the importance of innovation in maintaining the bank's competitive edge and was willing to take calculated risks to achieve it. By supporting Williams' ambitious ideas and overseeing the necessary adjustments to improve the system, Basie ensured that Bank of America stayed ahead of its competitors. The birth of the BankAmericard set the stage for the creation of Visa and the transformation of the credit card industry. It demonstrated the power of innovative thinking and strategic leadership in driving financial progress. Basie's contributions were instrumental in making the BankAmericard a successful and influential financial product, paving the way for Visa's future dominance. Section 3. Dee Hock, the architect of Visa's success. Dee Hock's journey to becoming the architect of Visa's success is indeed a remarkable story of resilience, innovation, and visionary leadership. Born in Utah, Hock grew up with a deep appreciation for nature and a rebellious streak that often put him at odds with conventional norms. His early career was marked by a series of jobs where he struggled to fit into the traditional corporate structure. However, his determination and willingness to challenge the status quo eventually led him to Bank of America, where he would make his mark on the financial world. In the 1960s, Hock was assigned to lead the National Bank of Commerce's credit card program, which was part of the BankAmericard network. He quickly recognized the systemic issues plaguing the credit card industry, including fraud, inefficiencies, and a lack of cohesive governance. Hock's innovative mind saw an opportunity to address these challenges through a radical rethinking of the organizational structure. Hock proposed the creation of National BankAmericard Inc., or NBI, a new entity that would manage the BankAmericard network independently of Bank of America. This organization would operate on a decentralized model, allowing member banks to issue cards and process transactions under a unified set of standards while retaining their autonomy. This structure fostered cooperation among competing banks and ensured the scalability and resilience of the network. The formation of NBI in 1970 under Hock's leadership marked a turning point. He introduced the concept of interchange fees, which provided a financial incentive for banks to join the network and issue credit cards. This mechanism was crucial in expanding the network and increasing the acceptance of BankAmericard. Hock's vision of a decentralized, self-regulating system was revolutionary and laid the foundation for Visa's future growth. The rebranding of BankAmericard to Visa in 1976 was another significant milestone. The new name symbolized the company's global aspirations and its mission to facilitate the movement of money across borders. Under Hock's leadership, Visa invested heavily in technology, developing advanced systems for real-time transaction processing and fraud prevention. These innovations ensured the network's reliability and security, building trust among consumers and merchants. Dee Hock's contributions to Visa's success cannot be overstated. His visionary leadership and willingness to challenge conventional wisdom transformed a nascent credit card network into a global financial powerhouse. By creating a decentralized, cooperative system, Hock ensured that Visa could adapt and thrive in a rapidly changing financial landscape. His legacy is a testament to the power of innovative thinking and the importance of strategic vision in achieving long-term success. Section 4. Challenges and Triumphs. The Path to Global Dominance. Visa's path to global dominance was paved with numerous challenges and triumphs. The early days of the BankAmericard were marked by significant hurdles, including high delinquency rates, fraud, and operational inefficiencies. These challenges tested the resilience and adaptability of the company, but ultimately contributed to its growth and success. One of the most significant challenges Visa faced was building trust among consumers and merchants. In the 1960s and 1970s, many people were skeptical about using credit cards due to concerns about security and the reliability of the payment system. Visa addressed these concerns by implementing robust fraud prevention measures and educating consumers and merchants about the benefits and safety of using credit cards. These efforts helped build confidence in the brand and drive widespread adoption. Navigating the complex regulatory environment was another major challenge. As Visa expanded globally, it had to comply with a myriad of financial regulations in different countries. This required a deep understanding of local markets and the ability to adapt its operations to meet regulatory requirements. Visa's success in this area is a testament to its strategic foresight and operational excellence. Visa's commitment to innovation was crucial in overcoming these challenges. The introduction of the Base One system in the late 1960s provided a centralized electronic authorization system that significantly improved transaction processing times and accuracy. This technological leap enabled Visa to handle a growing volume of transactions with remarkable speed and reliability. As the network expanded, Visa continued to invest in its technological infrastructure, ensuring that it could meet the demands of an increasingly digital economy. The rise of e-commerce and digital payments in the 21st century provided further opportunities for Visa's growth. The company developed new products and services tailored to online and mobile transactions, ensuring that it remained at the forefront of the digital payments revolution. Visa's ability to innovate and adapt to changing market conditions has been a key factor in its sustained dominance. Today, Visa operates in over 200 countries and territories, processing billions of transactions each year. Its global presence and extensive network of member banks have made it the most widely accepted payment method in the world. Visa's market dominance is a testament to its strategic vision, operational excellence, and relentless focus on innovation and customer satisfaction. Visa's journey from a humble payments processor to a global financial titan is a remarkable story of strategic evolution, technological innovation, and the ability to overcome challenges. By continually adapting to the changing needs of consumers and markets, Visa has secured its position as a leader in the global financial services industry. This story serves as an inspiration for companies looking to achieve sustainable growth and success in an ever-evolving landscape. Visa's dominance in the financial services sector has had a profound and lasting impact on the global economy. Its rise from a modest payments processor to the world's most valuable financial services company underscores the transformative power of innovation and strategic vision. By revolutionizing the way money moves around the world, Visa has reshaped consumer behavior, business operations, and the broader financial landscape. One of the most significant impacts of Visa's dominance is the widespread adoption of cashless transactions. Before the advent of credit cards, cash was king. Today, however, millions of transactions are conducted electronically, thanks to the extensive network and reliability of Visa's payment system. This shift has facilitated greater convenience for consumers and efficiency for businesses, enabling smoother and faster transactions. Visa's influence extends beyond just consumer transactions. It has also played a crucial role in promoting financial inclusion. By providing access to credit and financial services to underserved populations, Visa has helped bridge the gap between the unbanked and the formal financial system. This has had far-reaching implications for economic development, particularly in emerging markets where access to financial services can significantly impact quality of life and economic opportunities. Moreover, Visa's technological advancements have set new standards in the industry. Innovations such as real-time transaction processing, secure online payments, and mobile payment solutions have not only enhanced the security and efficiency of financial transactions but have also driven the digital transformation of the financial sector. These advancements have prompted other players in the industry to innovate and adopt new technologies, fostering a culture of continuous improvement and technological progress. Visa's dominance has also influenced regulatory frameworks and policies. As a global leader, Visa has been at the forefront of navigating complex regulatory environments and advocating for policies that support the growth and stability of the financial services industry. Its leadership in this area has helped shape regulations that promote fair competition, consumer protection, and financial stability. The lasting impact of Visa's dominance is evident in the way it has transformed the financial landscape. By pioneering innovations and setting new standards, Visa has paved the way for a more connected, efficient, and inclusive global economy. Its influence will continue to shape the future of finance for years to come. As Visa continues to innovate and expand, several key trends are emerging that will shape the future of the financial landscape. These trends present both opportunities and challenges for Visa and other players in the industry, requiring a continuous focus on adaptability and strategic foresight. One of the most significant trends is the rise of digital and mobile payments. With the proliferation of smartphones and the increasing penetration of the internet, consumers are shifting towards digital wallets and mobile payment solutions. Visa has already made significant strides in this area with products like Visa Checkout and partnerships with mobile payment platforms. However, staying ahead in this rapidly evolving space will require ongoing innovation and a deep understanding of consumer preferences. Another important trend is the increasing importance of data security and privacy. As financial transactions become more digital, the risk of cyber threats and data breaches grows. Visa has been a leader in implementing advanced security measures such as tokenization and encryption to protect sensitive information. Moving forward, the company will need to continue investing in cutting-edge security technologies and collaborate with industry partners to combat emerging threats. The rise of fintech and challenger banks is also reshaping the financial landscape. These new entrants are leveraging technology to offer innovative financial products and services, often targeting niche markets or underserved segments. While this presents competition for Visa, it also offers opportunities for collaboration. By partnering with fintech companies, Visa can enhance its product offerings and tap into new customer bases. Additionally, the growing interest in cryptocurrencies and blockchain technology is another trend that could impact the future of finance. While cryptocurrencies are still in the early stages of adoption, their potential to disrupt traditional financial systems is significant. Visa has already begun exploring the integration of cryptocurrencies into its network, offering support for digital currencies and blockchain-based solutions. Embracing these technologies could provide Visa with new avenues for growth and innovation. Sustainability and social responsibility are becoming increasingly important in the financial sector. Consumers and investors are placing greater emphasis on environmental, social, and governance (ESG) criteria, and companies are expected to align their strategies with these values. Visa has taken steps to promote sustainability, such as reducing its carbon footprint and supporting financial inclusion initiatives. Continuing to prioritize ESG factors will be crucial for maintaining consumer trust and staying relevant in the future. These trends highlight the dynamic nature of the financial landscape and the need for continuous innovation and strategic adaptation. By staying ahead of these trends and leveraging new technologies, Visa can continue to lead the industry and shape the future of global finance. Innovation and adaptability have been central to Visa's success and will remain critical as the company navigates the future. From its early days as Bank Americard to its current status as a global financial titan, Visa has consistently demonstrated a commitment to innovation and a willingness to adapt to changing market conditions. One of the key factors driving Visa's innovation is its investment in technology. The company's early adoption of electronic transaction processing and its development of VisaNet set the stage for its technological leadership. Over the years, Visa has continued to invest in cutting-edge technologies such as artificial intelligence, machine learning, and blockchain to enhance its products and services. These investments have enabled Visa to offer secure, reliable, and convenient payment solutions that meet the evolving needs of consumers and merchants. Visa's adaptability is also evident in its strategic partnerships and acquisitions. By collaborating with fintech companies, technology providers, and other industry players, Visa has been able to expand its capabilities and enter new markets. For example, Visa's acquisition of Plaid, a fintech company that connects applications to users' bank accounts, has strengthened its position in the open banking space and provided new opportunities for growth. Another aspect of Visa's adaptability is its ability to respond to regulatory changes and market dynamics. As the financial services industry becomes increasingly regulated, Visa has demonstrated a keen ability to navigate complex regulatory environments and adapt its operations accordingly. This has been crucial for maintaining its global presence and ensuring compliance with local laws and regulations. Visa's focus on customer-centric innovation has also been a driving force behind its success. By understanding and anticipating the needs of consumers and merchants, Visa has been able to develop products and services that provide value and enhance the customer experience. This customer-centric approach has helped Visa build strong relationships with its users and foster loyalty and trust. The company's culture of innovation and adaptability is supported by a forward-thinking leadership team that encourages experimentation and embraces change. This culture has enabled Visa to remain agile and responsive in a rapidly changing industry, positioning it for continued success in the future. As the financial landscape continues to evolve, Visa's commitment to innovation and adaptability will be more important than ever. By leveraging new technologies, forging strategic partnerships, and maintaining a customer-centric focus, Visa can continue to lead the industry and drive the future of global finance. Visa's legacy is one of transformation, innovation, and leadership. From its humble beginnings as the Bank Americard to its current status as a global financial powerhouse, Visa has consistently pushed the boundaries of what is possible in the financial services industry. Its journey is a testament to the power of visionary leadership, strategic foresight, and a relentless pursuit of excellence. One of the most enduring aspects of Visa's legacy is its role in promoting financial inclusion. By providing access to credit and financial services to underserved populations, Visa has helped millions of people around the world improve their quality of life and participate in the global economy. This commitment to inclusivity and social impact will continue to shape Visa's strategy and operations in the future. Visa's technological innovations have set new standards in the industry and driven the digital transformation of finance. From real-time transaction processing to secure online payments and mobile solutions, Visa has consistently been at the forefront of technological advancements. These innovations have not only enhanced the security and efficiency of financial transactions, but have also paved the way for the future of digital payments. Looking ahead, Visa's role in the future of global finance will be shaped by its ability to embrace new technologies and adapt to emerging trends. The rise of digital and mobile payments, the growing importance of data security and privacy, the emergence of fintech and challenger banks, and the potential of cryptocurrencies and blockchain technology are all factors that will influence Visa's path forward. By staying ahead of these trends and continuing to innovate, Visa can maintain its leadership position and drive the future of the financial services industry. Visa's legacy is also defined by its commitment to sustainability and social responsibility. As consumers and investors increasingly prioritize ESG factors, Visa's efforts to reduce its environmental impact, promote financial inclusion, and support social initiatives will be crucial for maintaining trust and relevance. By aligning its strategies with these values, Visa can contribute to a more sustainable and equitable global economy. In conclusion, Visa's journey from a humble payments processor to a global financial titan is a remarkable story of innovation, strategic vision, and resilience. Its impact on the financial landscape has been profound, and its legacy will continue to shape the future of global finance. As Visa navigates the challenges and opportunities of the future, its commitment to innovation, adaptability, and social impact will ensure that it remains a leader in the financial services industry for years to come.